The Bank of Canada also made a significant announcement today, slashing the key interest rate for a third time this month. It's now at 0.25%. Here's the governor.
Some may suggest that this is using a lot of firepower, but I think that a firefighter has never been criticized for using too much water, and I think if you like, that's where we want to make sure of it. We've got great market function, and indeed that the economy then has a great foundation for growth when activity resumes.
When that activity does resume, Canada will be, or at least the federal budget will be in a far deeper hole. The budget watchdog says the deficit could top $112 billion next year. But is that unavoidable given these circumstances? Brett House is Deputy Chief Economist with Scotiabank. He joins us from Toronto. And Pedro Antunes is the Chief Economist with the Conference Board of Canada. He's over in Chelsea, Quebec. Hello to both of you. Great to see you.
Good evening. Good to see you.
Brett, why don't I start with you? I want to get into the announcement from the Prime Minister, from the government today, but I actually want to start. We haven't had much discussion yet on the show tonight around the Bank of Canada's decision. Can you outline for our viewers the significance of this second unscheduled cut and the fact that the governor has said this is as low as he can go?
Massive policy changes from the Bank of Canada today, and in some ways they were partially anticipated. Most economists did think that the bank would follow through with another substantial rate cut, and that it was waiting to do so only to ensure that it had the plumbing in place in the financial system such that it would transmit through to the different parts of the economy that it wants to reach. And so over the last week and a half or so, you've seen the Bank of Canada implementing new lending facilities, new credit facilities that were designed to ensure that the last cut they put in on an exceptional basis really translated into lower borrowing costs for businesses and Canadians across the economy. Having put some of that plumbing into place, they followed through with another rate cut today, and they did two more exceptional things. They created another facility that will allow them to buy a range of what is known as commercial paper, so very short-term debt that's issued by businesses to finance their operations under about a 3-month maturity in most cases. And they are going to initiate what is known as quantitative easing, which Canada wasn't pushed into doing in the wake of the 2008 financial crisis. So this is somewhat new territory for the bank, but we can learn from the lessons of other countries, and that is designed to keep not just short-term borrowing costs down, but also longer-term borrowing costs in the Canadian economy. So really big moves.
Yeah, I want to dig into that last part that you mentioned there, Brett. Pedro, can you explain in the most basic terms possible what quantitative easing is?
Well, it's in fact really quite simple. The Bank of Canada can essentially print money and purchase bonds that are on the market, and that has the effect of doing two things. It essentially lowers yields for bonds at all areas, at all yields and maturities. Depending on where they're purchasing, but the intent really is to lower rates at the long end and longer term borrowing costs. It's essentially injecting a lot of liquidity, a lot of money into the system. It's yet to be seen how we manage to get out of this when we do see the economy recover. I think there's going to be long-term consequences of some of these moves, but for now, it's absolutely the right move. We need to ensure that there's liquidity in the system, that corporations and households can borrow their way, if need be, through this very tough patch of loss in revenues and loss in wages.
Yeah, let me just follow up with you quickly on that, because for the average Canadian watching tonight, what does that extra liquidity mean for them?
Well, it means that they'll be able to more easily be able to borrow. Essentially, interest rates throughout the lending mechanisms that are out there will be lowered, be it prime rates, be it home equity lines of credit, and hopefully we're seeing some of this move as well on credit cards as well. So essentially, this is to get households and businesses through this really rough patch where they're losing revenues.
Brett, often since the beginning of this crisis, when we've heard the Bank of Canada's Governor, Stephen Poloz, talk about this, he has emphasized over and over, and it's been reiterated by the federal government too, that monetary policy is one thing, but it won't have the kind of effect on the economy that it would under other or more normal circumstances in this case. And so the focus should be should be on fiscal policy, that fiscal policy can really make a difference here. Do you agree with that statement, and sort of how do you interpret that for our viewers?
Well, I think the important thing that you saw today is the finance minister and the governor of the Bank of Canada speaking in tandem and in a coordinated fashion, because in fact what we need is both monetary and fiscal policy for a situation like this. You need the easing measures that make borrowing cheaper that the Bank of Canada has brought forward in order to ensure that anyone who needs to borrow can do so at the cheapest terms possible. And then you also need the fiscal stimulus that's coming forward right now to put money in the pockets of people who aren't looking to borrow. They're just trying to cover their groceries, cover their rent, make sure they can meet their basic day-to-day living expenses, or on the business side, keep the lights on and keep paying their employees, even though they don't have much demand for their services right now. Yeah, so you really need both in a situation like this, because this is totally unlike 2008, where we had problems in the financial sector that caused that crisis. Right now, we're just shutting everything down. It's a totally different situation and needs both measures.
Pedro, on the fiscal announcement today, the government laid out a plan for small and medium businesses that included a wage subsidy far greater than the one originally announced a few weeks ago. So they jumped from 10 to 75%. What, from your perspective, is the benefit of that policy?
Well, and certainly I agree with Brett here that the idea here is just to make sure that the income is there for households and for businesses as they get through this period. And we want to avoid, of course, bankruptcies both for households and businesses to ensure, of course, that the financial system and the financial services industry stays intact. In terms of the implications of of this kind of massive move, and it really is because the first announcements were really targeted at making sure we got essentially revenue or income into the hands of people that were being affected by job losses and layoffs. I think this move is, and in fact, what we saw from that was a huge demand for, in terms of EI claims, and the concern that we all were having looking at this was, are we going to be able to get the income or the measures, the transfers into the hands of people quickly enough? So this next step really is to leave that burden with corporations, subsidize the wages, and leave the payments to be made by the corporations. So not putting as much stress on essentially public services to get the transfers out to people.
Brett, I want to switch gears a little bit, but I really want to get you to weigh in on this, because we were just listening to Premier Kenney, Alberta Premier Kenney, who was outlining not only the shock to Alberta's economy that everyone across the country is feeling where COVID-19 is concerned, but also the shock being felt given the price of oil right now. What is your perspective on, the Western Canada Select, I think, is somewhere between $5 and $7 right now. How big of a blow to Alberta and Canada's economy is this sort of second shock, Brett?
I think the latter part of what you just said is the important point. This is a blow to the entire Canadian economy, because it's not just the oil-producing provinces that are hit by it. It's also central Canada and the other parts of the country where we produce goods and services that are used by the oil sector and that are bought by companies and people that work in the oil patches. So, Canada is really being faced here by a double whammy. Of both incredibly low oil prices, one of our major commodity exports, and the COVID-19 related shutdowns. And you're seeing, similar stresses on other oil-producing countries in the world. So, we are a little distinct from what's happening globally in that we've got both things happening here right now.
Pedro, I spoke with the Premier of Newfoundland and Labrador. Alberta's Premier as well is calling for help from the federal government on this. What do you think, from a policy perspective, we should be expecting, or what do you think would be most effective when it comes to help for the sector?
Well, that's a good question, and how we ensure that the sector stays stable and tenable, and we don't see a lot of bankruptcies through this period is going to be difficult. Of course, we're seeing revenues. In fact, oil prices here for Western Canada Select that for most for I think all producers, certainly with respect to heavy oil, they're taking losses for each barrel that they pull out of the ground at this point. I think the conventional industry, which is made up of smaller players, we're probably going to see a lot of stresses to those smaller businesses in the oil patch. With the big producers, of course, hopefully they have the wherewithal and the capacity to withstand a short term. Let's hope this is not too long a period with these really untenably low oil prices, and they'll be able to hold through. And I think production in some instances will continue because it's very costly to shut down oil sands operation or offshore oil. So I think we're probably going to see more targeted measures at the smaller players, the conventional producers. We'll see if there's also some help if the bigger players do get stressed as well.
Okay, I have to leave it there. I'm out of time, but I want to thank both of you for your time this evening and your expertise. Really appreciate it. Thanks to Brett House with Scotiabank and Pedro Antunes with the Conference Board of Canada. Hi, I'm Vassy Kapelos, host of Power in Politics. See more of our show by subscribing to the CBC News channel or click the link for another video.